Welcome to Dinar Community, your trusted source for accurate intelligence, not baseless rumors or hype. In today's important update, we highlight major shifts currently impacting global currency markets. These are not mere whispers from internet forums or unconfirmed blog entries. These developments were officially announced on national television, validated by credible authorities, and are already influencing global leaders in trade, international finance, travel, and long-term investment planning. If you currently hold Iraqi Dinar (IQD), Vietnamese Dong (VND), or are thinking about entering these currency markets, this update will deepen your understanding and help you make well-informed decisions. These changes affect not only Forex traders but also international businesses, diaspora communities sending money home, students studying abroad, and travelers planning budgets. What sets this update apart from the countless speculative pieces online is our dedication to verified, data-driven reporting. We rely on official announcements, economic indicators, and observable market reactions, not wishful predictions or vague social media chatter. Every minute spent with this report offers factual insights that could influence your personal and professional financial planning in the coming months. The Iraqi Dinar (IQD) has long been at the center of speculation, often clouded by unrealistic hopes and misinformation. Yet Iraq's narrative is shifting from speculation toward concrete progress. For years, Iraq's economy has been shaped by vast oil wealth and regional instability. Now, recent reforms from the Central Bank of Iraq signal a move toward a more stable and self-reliant financial future. Key reforms focus on fully digitizing Iraq's financial system to reduce corruption, close cash handling loopholes, and establish transparent domestic and international transaction processes. These steps are critical for a country that has faced instability for decades but is now laying the foundation for sustained economic growth. What makes these recent developments credible are the public, televised government announcements, not leaks or rumors, but clear commitments from Iraqi financial leaders. Official confirmations reveal that the Iraqi dinar is beginning to strengthen against the US dollar, lending real weight to years of patient speculation by currency holders. For everyday Iraqis, a stronger dinar means real improvements, increased purchasing power, more affordable imports, and the confidence that comes with a stable national currency. While a full revaluation isn't declared yet, data-backed trends indicate a gradual and strategic realignment is in progress. This upward movement isn't just numbers on a screen, it signals the potential for significant economic transformation in Iraq. Beyond currency changes, the Iraqi government is implementing broader reforms, partnering with global institutions like the IMF and World Bank. These collaborations provide technical support and international credibility as Iraq builds transparent banking systems, modern regulatory frameworks, and attracts responsible foreign investments. A critical challenge being addressed is Iraq's heavy reliance on a cash-based economy. Over 90% of money circulates outside formal banking, which hampers fiscal control, fuels black market activities, and weakens monetary policy. The central bank's new approach aims to reverse this by promoting digital payments, expanding banking access in underserved areas, and encouraging the public to bring hidden wealth into official circulation. Successfully achieving this would stabilize the currency, reduce inflation, improve loan access, and fund infrastructure through stronger fiscal reserves. Recent improvements in exchange rates show these reforms are starting to take effect. This is no longer speculation. It is a country rebuilding its financial foundation for long-term prosperity. Turning to the Vietnamese Dong (VND), the story is different but just as significant. Vietnam has steadily grown into a key Southeast Asian economic hub, driven by expanding industries, strong exports, and growing tech innovation. Recently, the VND has slightly depreciated against the US dollar and euro, sparking some speculation about weakness. However, this mild depreciation is mainly due to global pressures, not Vietnam's domestic economy. Challenges like rising global inflation, supply chain disruptions, and higher import costs for raw materials and energy are impacting many emerging markets, not just Vietnam. Despite this softness, Vietnam's fundamentals remain robust. Foreign direct investment flows continue, especially from companies seeking alternatives to China's manufacturing dominance. Key export sectors, electronics, textiles, footwear, stay competitive and generate significant foreign revenue. Vietnam also shows solid macroeconomic management with steady growth in IT, agriculture, and logistics. Some experts argue this minor currency weakening may actually benefit Vietnam mid-term, making its products cheaper and more attractive internationally, boosting exports and jobs. This export advantage could expand Vietnam's global market share in sectors it excels at. For investors or those considering entering the Vietnamese currency market, the current dip could offer a chance to buy VND at favorable rates ahead of potential gains as the economy grows. These currency movements matter not just to traders or bankers but affect millions worldwide, families sending remittances, students paying tuition, travelers budgeting trips, and businesses managing costs. For Iraqis, a stronger dinar may ease inflation, making essentials like food, medicine, and clothing more affordable and improving quality of life. For Vietnam, a slightly weaker dong supports its export-driven economy, sustaining jobs and attracting investment. Currency shifts also influence government policies. Central banks adjust interest rates, borrowing, and trade deals, which impact loans, housing costs, wages, and employment. Even small currency changes can ripple into major effects across public and private sectors. Therefore, staying informed about currency trends isn't optional, it's essential for anyone handling finances. But remember, credible info is key. Many online sources push sensational claims of instant revaluations or crashes. Smart financial decisions depend on facts, not fantasies. Follow central bank releases, official economic data, and expert analysis for a clear view of trends. Currency changes reflect deeper, long-term national and global shifts, requiring steady, thoughtful responses, not hyper-rush decisions. The developments with the Iraqi Dinar and Vietnamese Dong illustrate the difference between real economic change and speculation. In Iraq, the dinar's value is rising due to intentional, long-term reforms by the government and central bank to modernize the financial system. Moving from cash to digital finance is not just convenience, it's about fiscal control and national security. When most money operates outside banking, governments lose economic oversight, making inflation control and tax enforcement nearly impossible. Digitization improves monetary control, banking services, and credit access, building trust and attracting investment. Vietnam's situation highlights how external global forces can temporarily influence a currency's value. The dong's response to inflation, commodity prices, and trade changes shows Vietnam's integration with the global economy. That Vietnam's currency reacts to international trends rather than collapsing due to mismanagement signals economic maturity. A weaker dong can help exports, increase revenues, and support job growth, a strategic advantage in today's competitive markets. Neither development should be judged through internet rumors or speculation. Real progress relies on structural reforms, transparency, and measurable results, not empty promises of quick riches. Both Iraq and Vietnam are laying groundwork for lasting economic success, not short-lived speculative spikes. For anyone holding IQD or VND or considering investment, a calm, patient approach is vital. Currency markets are complex, affected by politics, central bank moves, global trade, and conflicts. Emotional or rushed decisions based on incomplete info often lead to losses. The best investors rely on verified info, monitor official updates, and consult financial professionals for analysis. Currency revaluation or depreciation happens gradually after sustained economic shifts and coordinated policy actions. Waiting for confirmed trends before acting is wise, not weak. Avoid impulsive moves and hype. Build well-researched strategies that adapt as verified data emerges. Strategic awareness always beats impulsiveness. Whether holding, buying, or watching IQD and VND, patient, informed decisions grounded in facts increase the chance of benefiting from true economic transformations over time. As Iraq's reforms progress, important discussions are emerging about fairness and inclusion in exchange rate policies. Some proposals suggest preferential rates for certain sectors or investors. While seemingly practical to attract capital or repatriate funds, such dual-rate systems risk eroding public trust. If people believe financial benefits favor elites or foreigners, confidence in financial institutions can falter quickly. Iraq's economic progress must rest on fairness and transparency. To become a regional economic leader, Iraq's currency policies need equity at their core. Reforms like banking digitization, anti-corruption, and international cooperation will succeed only if all citizens feel included. True success depends on participation from rural families, small businesses, students, and workers, not just wealthy groups. Equity is not just ethical, it's foundational for sustainable growth. Structural reforms must go beyond symbolism to improve everyday life. Inclusive development builds national unity, boosts domestic confidence, and strengthens Iraq's global financial standing. Looking forward, a key principle stands out. Successful currency investing, whether IQD, VND, or others, needs more than hope. It demands continuous attention to verified developments and disciplined decision-making. For individuals, families, and businesses, staying informed means watching official updates, tracking policy changes, and following economic trends. Avoid shortcuts and hype-driven promises. Recognize that true financial change is often slow but steady. Currency investing is not gambling. It requires strategy, patience, and precision. Updates on IQD and VND provide real lessons. Meaningful change is policy-driven, reform-backed, and structurally supported, not flash headlines. Rumors fade, fundamentals endure, financial transparency, strong institutions, and inclusive growth. We'd love to hear your thoughts. How have these developments influenced your plans? Are you holding your currency, converting, or waiting for more confirmation? Share your views in the comments below. Your participation enriches this community. Together, we can develop smarter financial strategies. If you found this update helpful, please support the channel by subscribing, liking, and enabling notifications. Staying connected keeps you ahead. Together, we'll track every shift, announcement, and development that could affect your financial future. Stay vigilant, stay informed, and above all, stay prepared. Your future deserves nothing less. Like and hashtags for this video.